Listen, guys, I need you to lock in right now because what I'm about to say is not hype for the sake of hype. It's not clickbait. It's not fantasy land. XRP at $10 is not crazy. But here's why you cannot look at that number the way everybody else is looking at it. Everybody sees $10 and they think moonshot, overnight pump, retail frenzy, green candles flying everywhere. I'm telling you what, that is not how this plays out. If XRP hits $10, it will not be because of a meme rally. It will not be because of some influencer screaming on Twitter. It will be because infrastructure quietly locked into place behind the scenes. And right now, we are watching pieces move that most people are not paying attention to. Regulatory clarity conversations are accelerating, institutional custody solutions are expanding, cross border payment corridors are being tested and scaled. You cannot make this up. While retail is distracted by meme coins and short term volatility, the real story is about plumbing. It's about rails. It's about who controls liquidity. And XRP was designed for exactly that. I really do believe that if we see $10, it will be the result of years of legal battles, years of positioning, years of being battle tested. And here's the part people don't want to hear: that kind of move doesn't reward the impatient, it rewards the positioned. So the question isn't, can XRP hit 10? The real question is, what happens in the market structure that makes 10 look logical? That's the conversation we're having today. And if you are serious about understanding where this is going, not just emotionally reacting, but strategically positioning, then you need to align yourself with smart information. That's why I keep telling you, Alerta Roja USA. Pay attention, because when this thing moves, it won't send a calendar invite first. Now let's break this down logically because I don't want you walking away thinking this is blind optimism. For XRP to reach $10 sustainably, we are talking about a significant expansion in utility and liquidity demand. That means real transaction volume, not just speculative volume. Think about it like this. If XRP becomes a bridge asset at scale for banks, payment providers, or tokenized assets moving across borders, then the demand for on-demand liquidity increases. And when demand increases while supply remains algorithmically predictable, price pressure follows. That's basic market mechanics. But here's what most people miss: regulatory clarity is the ignition switch. Institutions do not deploy serious capital into legal gray zones. They wait, they lobby, they position quietly, and once the green light flips, they move fast. I'm telling you what, we are closer to that clarity conversation than we have ever been. The legal overhang that once suppressed XRP's narrative is not the same beast it was a few years ago, and as that cloud lifts, perception shifts. When perception shifts, capital flows. And when capital flows into an asset that already has global exchange liquidity, established infrastructure, and integration with financial players, you start getting price discovery that shocks retail. But here's the catch: $10 isn't just a number. It implies a market cap shift. It implies capital rotation from other assets. So ask yourself, what environment would cause that? Maybe a Bitcoin consolidation phase. Maybe ETF capital rotating into high utility alts. Maybe global settlement systems looking for faster rails. These are not fantasies, these are macro possibilities. I really do believe that if those dominoes align, $10 becomes a waypoint, not a ceiling. But you need to think in systems, not candles. And again, if you want to stay ahead of these shifts, Alerta Roja USA. Stay plugged in, stay informed, stay strategic. Let's talk psychology because this is where most investors lose the plot. If XRP starts climbing aggressively toward $5, $6, $7, volatility will increase. Media narratives will flip overnight. The same outlets that ignored it will suddenly call it the comeback story of the decade. And what happens then? Retail floods in late. Emotions spike. People start chasing green candles instead of evaluating infrastructure. I'm telling you what, the difference between someone who benefits from a move to 10 and someone who gets shaken out at 4 is mindset. You have to understand cycles. Markets move in waves of disbelief, acceptance, excitement, and euphoria. If XRP approaches double digits, it will likely be during a broader crypto expansion phase where liquidity is flowing freely. That means altcoins are running, narratives are exploding, and volatility is extreme. In that environment, discipline matters more than ever. because $10 might come with violent pullbacks along the way, 20% swings, 30% corrections. You cannot panic in those moments if your thesis is long-term infrastructure adoption. I really do believe XRP's strongest case is not retail speculation, but enterprise utility layered on top of public liquidity. That's a powerful combination. And if tokenization of real-world assets accelerates, if cross-border settlement becomes more digitized, XRP's design becomes relevant again in a big way. So don't just stare at price targets. Ask what fundamental shift makes that price sustainable. That's how professionals think. That's how you stay ahead. And that's why I keep saying Alerta Roja USA, because awareness beats emotion every single time. So let's really bring this home the right way, because this is where the difference between emotional investing and strategic positioning becomes crystal clear. XRP at $10 is possible, but it is conditional. It depends on regulatory normalization, institutional integration, macro liquidity cycles, and narrative momentum aligning at the same time. That's not hopium. That's not blind faith. That's market structure. Markets move when structure shifts, not when Twitter gets excited for a weekend. And here's what I really need you to internalize. When an asset survives regulatory attack, multi-year consolidation, delistings, lawsuits, media skepticism, and still maintains global liquidity, exchange depth, and one of the strongest communities in crypto, that resilience matters more than hype ever will. Markets reward survival. Markets reward infrastructure. Markets reward assets that are still standing when the dust clears, and XRP is still standing. Think about it. There was a period where the narrative was that XRP was finished, done, over, and yet liquidity remained, developers kept building, payment corridors didn't disappear, the conversation around cross-border efficiency didn't die. That tells you something. Assets that are purely speculative usually fade when pressure hits. Assets with underlying utility fight to stay relevant. That fight, that resistance, that ability to absorb blows without collapsing into irrelevance, that is exactly what sets up a future revaluation cycle. Now let's talk about what revaluation really means. If we enter a phase where digital assets are no longer treated as fringe speculation, but as financial infrastructure, that changes the lens entirely. We're not talking about meme-driven rallies. We're talking about settlement layers, liquidity rails, tokenization, cross-border efficiency. If institutions begin treating blockchain networks as operational tools instead of experimental toys, then assets designed for throughput and liquidity bridging suddenly move into a different category. And XRP has always positioned itself in that infrastructure conversation. That's the difference. It's not trying to become relevant. It has been fighting to remain relevant. And if that fight transitions into recognition, $10 is not some magical moon target. It becomes part of a broader repricing event. When perception flips from speculative altcoin to financial rail asset, valuation models adjust. Capital allocators reassess risk. Funds that once hesitated begin testing exposure. Liquidity deepens. And price discovery accelerates. But here's the reality most people don't like hearing. By the time mainstream confirmation arrives, by the time every major outlet is nodding in agreement, the repricing has already happened. You cannot wait for unanimous approval. By the time everyone agrees, the asymmetry is gone. So what do? You educate yourself. You study market cycles. You evaluate risk honestly. You position according to your conviction and time horizon, not according to someone else's emotional timeline. You decide in advance what volatility you can tolerate, because if XRP does move toward higher valuations, it will not be a straight line. There will be pullbacks, there will be fear cycles, there will be moments designed to shake out weak hands. That is how markets function. This is the mindset shift. This is the strategic edge. If you believe in the long-term infrastructure thesis, meaning regulatory clarity improves, institutional rails expand, and macro liquidity rotates into high-utility digital assets, then temporary volatility becomes noise. If you don't believe in that thesis, then no price target will ever feel safe enough to hold through turbulence, and that's the honest truth. So ask yourself something real right now. Are you reacting to headlines, or are you aligning with what a future financial system might actually look like? Because if that system integrates XRP meaningfully, not as hype, but as plumbing, then $10 won't feel shocking when it happens. It will feel like a delayed recognition of what was building all along. Stay sharp, stay disciplined, think in systems, not candles. And if you're serious about tracking this evolution step by step, filtering signal from noise and positioning with intention instead of emotion, then you already know what time it is. Alerta Roja USA.